So first and foremost, we want to welcome you. I'm Kirsten Flory with Foundations Commercial Real Estate, and thank you for joining us today. We thought we wanted to provide some value-added educational pieces with our partners with INTRUST Bank and Wakarusa Valley Development to talk about small business lending, because I think all of our communities, whether we're here in Topeka or Lawrence or across the state, I think we have a lot of small businesses that are doing some incredible things, and if we can learn more from each other and from our experts in the room to be able to connect to grow our companies and our wealth and find amazing resources to get tapped into. So I'm going to introduce our panelists today. So from INTRUST Bank is Christy Schumard. Christy, 25 years of banking experience has been spent working with small business owners and commercial customers. And over two decades at INTRUST Bank, she's held the roles of SBA Administrator and SBA Lending Supervisor and Manager, Small Business Lending. She currently serves as Manager SBA Lending, and her efforts to help entrepreneurs expand with access to additional capital empowers hundreds of business owners to realize their dreams. Chrissy led INTRUST Paycheck Protection Program, the PPP program, if you remember that. No. I like to forget about that, but that's a great program, allowing INTRUST to administer more PPP loans in the state of Kansas than any other bank. She possesses expert level knowledge on the SBA rules and regulations, is a board member for Certified Development Company and a current member and past chair of the National Association of Government Guaranteed Lenders, NAGGL acronym, Region 7 Committee. So welcome, Chrissy. Appreciate it.
Thank you.
And Troy Roberts. Troy is the Executive Director of Wakarusa Valley Development, Inc. It is a mouthful, and has served in that role for the past 21 years. His primary focus is the 504 loan program, underwriting, marketing, and packaging of 7A loans. Previously, he worked as the Director of Convention and Sports for the Lawrence Chamber of Commerce, where he focused on economic development through travel and tourism. I noticed a little side note here that your wife's name is the same as my name.
Kirsten. Yes.
Wow.
Yes.
I think that's
You're the
fantastic.
only other person
I know.
Yes, so I won't
Sorry,
butcher it like she gets, like Kristen, Christy. Yeah.
I appreciate that.
Yeah.
But thank you both for being here. I also want to thank our hosts, Bartlett and West, on their gorgeous facility. And I know many of you have never been in here before, but it's a true gem on this side of Topeka. And our firm, Foundations Commercial, has a space available in this building. So put in a plug for if you or anyone you know in your world has interest in leasing space within this building, please come talk to us. There's information on the back. There's also some handouts provided by Wakarusa Valley Development on the back as well. We will also be emailing out this presentation. Thank you to Wes for filming us today. So you can rewatch it or share it with anyone you want to, as well as additional resources with the handouts today and stuff like that. So I also want to especially thank INTRUST Bank for sponsoring our program today and providing the refreshments. So thank you to Beth Easter and her team. Really appreciate that. All right, should we kick off some questions?
Sure.
All right, Chrissy, this first one's for you.
All right.
Can you explain the different types of SBA loan programs available and how businesses can determine what's the best fit?
Perfect. There's really 3 programs available. There's the 7A program, which has several different lending vehicles under it. So the Express program, which is primarily used for revolving lines of credits. There's also cap line programs that can be used for working capital cap lines, builder cap lines, contract cap lines. And those are larger revolving facilities, so something that can go up to $5 million versus the Express program that caps at $500,000, excuse me. Additionally, under that 7A program, there's export programs. So for folks who export their product, it doesn't have to be all of their products. It just has to be a percentage. It can be even 2% of what they make gets exported, and they qualify for these export programs. So that's really, kind of in a nutshell, everything under the 7A umbrella. Otherwise, there's the 504 program, which Troy here is the expert on, so I'll kind of leave that one to him. But just kind of in a nutshell for that one as well, it's a program where we partner with a certified development company such as Wakarusa. The bank holds 50% of the total project costs and finances that. The CDC works with the SBA to finance anywhere from 30 to 40% of the total project costs, with the customer inputting anywhere from 10 to 20%, kind of depending upon the project. The other program, so to speak, is going to be their disaster loan program. And so that's when you hear about, economic injury disaster loans, the EIDL loan program, as well as like PPP. Right now, they're doing disaster loans specifically for like flooding here in Kansas. They just recently opened up a program. Actually, they're running an office out of Wichita in the Ruffin building. They're also running an office out of El Dorado, I believe, in Butler County, for those disaster loans specifically related to the floods that occurred here in Kansas. So those are the 3 main programs with the SBA.
Thank you. I'm gonna turn over to Troy to go into the other SBA program, because I know you mentioned that 504.
Yeah. So I always say that, the flagship of the administration is the 7A. It's what started the administration back in the 50s, I believe. The 504 is the most straightforward. Really, it's ideally for real estate, of course. Maybe just to expand a little bit on what Chrissy said, it's not just to acquire, it's to improve, it's the debt refi, or debt refi with expansion. So there's 3 different tiers of debenture as far as our maturity. It's either a 10, 20, or 25 year. The banks don't have to match that maturity. The standard's usually 20 years for commercial property, so you can maintain that while we go a little bit further. The 25-year term is relatively new in the last couple of years. 10 years more intended for equipment. You can get creative. We've done a crane. Basically, if you can't put it on the highway and drive it, it's a possibility. Or when you do a real estate, you can do large pieces of equipment as part of that too. So it's generally you have to figure out the economic life of that piece of equipment. Does it make sense to do it with the real estate, or maybe do a companion loan, 504 and 7A? So you can get real creative amongst all of these loan programs.
Sounds great. And hang on to the microphone. Can you walk us through the timeline of the SBA loan process from application to funding?
That's a loaded question right now.
And it goes really fast, right?
Yes. So do I talk in the now instance with the administration and how it's acting, or the standard? My standard line, I would always say, is 2 to 4 weeks, but now I'm saying 4 to 6 weeks. And ideally, your first question is, what are we financing? What stage are you at? And the earlier that you get the CDC involved, as a lender, the earlier you can pull us in, the better that we can manage expectations, because there's all kinds of things that throw us off track.
You both used an acronym, CDC. Can you explain what that
yes,
is?
Sorry. So a CDC, we're not Centers for Disease Control, that everybody learned during COVID. Certified Development Company. So as I like to joke, we're not the SBA. We're certainly not the SBA. We act like a bank, but we're not a bank. We're just really an economic development, not for profit. Technically, is what our organization is. So, the timeline. So, pull us in as quick as possible, because there's all kinds of things that could throw off, the expectations of the borrower and the bank. If you're buying a piece of property that's across from a gas station, well, there could be some environmental concerns. If they're buying a big tract of land, it may be considered in excess of what the business is going to use. Is the appraisal done, or is the appraisal short? So there's all kinds of stuff that, inevitably, once we get pulled in, I'm just like, call me, let's talk through it. And the banker, the borrower, doesn't even know that I'm just vetting the whole eligibility of the situation and seeing what are the pitfalls that we can do. And we've financed brownfield sites, so we can navigate a bad environmental, but those are the things that set us back. That 4 to 6 week range that I'm doing now, that's a turnkey property. That's obviously not a construction project. So.
So Chrissy, question for you. What are some creative ways small businesses can leverage SBA loans beyond just startup capital? We talked a little bit about it, but what are some other things that we're not thinking about outside the box?
Yeah, so expansions. We see the SBA programs used a lot for expansion projects, whether that's hiring new employees, acquiring new commercial real estate, whatever the case may be. We see that quite a bit. Also, changes of ownership. We're seeing that a lot here recently, especially with the boomers kind of going out and the new folks coming in. We're seeing a lot of change of ownership situations. Other than that, working capital cap lines, lines of credit. It's not working capital cap lines, that's a program. But lines of credit, we see them used a lot for that. So if somebody has a need for, accounts receivable, inventory support, something like that, we can do a line of credit. I'm just kind of looking at my notes here, making sure I'm not missing anything. But Inventory is another need, so equipment, inventory, working capital, commercial real estate. We can really kind of fit all of it into one of the programs. Now, each of those isn't going to be a fit for every single program, but we can identify which program is the best fit for your needs. And then, of course, the 504, we can use that for commercial real estate, like he indicated, large pieces of equipment, things like that. And so really, whatever your business need is, we can probably fit it into an SBA program. Really, the one big thing that isn't allowed is research and development. We see folks come through a lot needing funds for research and development for whatever their product is. And unfortunately, that's not something that can be financed using the SBA programs. But the vast majority of every other use is an acceptable use of funds.
That's great. Troy, question for you. What trends do you see in the future of small business financing, and how should entrepreneurs prepare to stay competitive?
Check my notes on this one. Okay, this is going to be a boring answer on my first one, but advances in like technology, I think, are a little bit overblown in the banking world. I still think it's relationship business. We see promises and get pitched every day about ways to upload your loan documents into a portal and to make our life easier, the borrowers easier. But as Christy and I have kind of touched on, there's a lot of depth into just the initial acquisition of a piece of property. So most often you have lenders, or not lenders, but some lenders, but borrowers that just don't have the sophistication of the financial documents that they need to provide us to make a credit decision. So while it sounds good, I don't think we're in that utopia yet of advancements in technology. So still picking up the phone and having that personal conversation is still kind of my way of doing things. But to be competitive though, a lot of times I always say we're a little bit more of the caboose than the engine. Where we're at, there's other resources through SBA, through SCORE, through SBDC. We may have a call that. Maybe it's an early retiree that wants to buy into a franchise. Great idea, but where's the business plan? We do help with business plans and pro formas and all that stuff, but there are better resources that we can make a recommendation to an SBDC or a SCORE volunteer or something like that. So be willing to invest in those other resources. And when you do go into a bank and you have that initial conversation, that you're leaving something behind, because you're just going to have a conversation at first, but you need to go a little bit deeper and leave something for that banker to make a credit decision. And being prepared, you're just going to be that better off, to get that ultimately the loan that you need.
Mm-hmm. That's a great answer. Chrissy, question for you. How can small businesses build financial resilience in today's economy and remain attractive to lenders and investors?
So really, it's going to be diversification. So diversification of income streams is a big thing. Also diversifying your supply chain. Right now with the tariffs, that's a big deal. It's all over the news. Who's your supplier? Where are they getting their goods from? Is it something where you need to look at, potentially somebody here in the United States for that particular supplier? So kind of just diversification is a big thing. Really, businesses need to kind of foster a culture of adaptability in today's world. Embracing technology is a big thing. Technology can be a good thing. It can improve efficiencies and reduce costs. And just, needing to be flexible and able to pivot quickly when faced with challenges. That's a big deal for small businesses as well, because there's challenges everywhere. Something that you may not foresee today can happen tomorrow. So just being, prepared for that. And also, I always say businesses themselves need to conduct risk assessments. So identify potential financial and operational and supply chain risks associated with your business and trying to get ahead of those.
Good. Troy, do you have anything to add?
In my notes, I've got two things, and they're simple, but we talk to a lot of entrepreneurs, a lot of startups. It's as simple as pay as agreed. It doesn't matter to me if it's a car loan. There's many times where they don't even have a banking relationship yet. So I always start there. I ask them who's their bank of account. But maybe I'm looking at Mike, so I'm just going to use Mike as an example with CapFed. Maybe they have a mortgage, a house mortgage with CapFed. So, if that's one person they can go talk to. So if you pay as agreed on a car loan, on a mortgage loan, there's at least some history that you can point to that they're creditworthy in that sense, even though it's not a business loan. The other thing I'm just going to add to what Christy was saying, build equity. A lot of times, a small business is the person that owns it and runs it. There's no separation between the business itself and the person that runs it. And you can have a very successful business, but I've seen many principals that are highly leveraged on the personal side. They draw a big salary because they have a big house and 3 cars. And that's a credit risk from a sense that, if you're the only person running your business, how leveraged are you on both sides of the coin? We are looking at the business, but we're also looking at you from a personal standpoint of how well you manage that. Do you have to pull that big salary? That's going to jeopardize the business loan that we're going to give you because you have to pay your mortgage and your vacation home. So just those are simple credit things, but talking to a lot of entrepreneurs and startups, that's something that you need to consider, how you handle both sides of the business and personal.
That's great. And kind of follow-up question, I think we kind of talked about this a little bit, but I'm talking more about early stage businesses, because we do get a lot of, in our industry too, those brand new startups. They've never done commercial lending before. They may or may not be classified as a small business lending customer, but what strategies can those newer or early stage businesses use to strengthen their loan applications, especially if they have limited credit history?
Yes. So kind of echoing some things that Troy said, having a solid business plan is going to be paramount when we're reviewing a loan application. We want to see what your target market is, what your competition is, your goals, your strategies, how you're going to accomplish that. With that business plan, of course, we're going to look at projections. Typically, it's going to be 3 years of profit and loss projections, first year broken down month by month. We want written assumptions with that. We want to know how those figures were derived. Where did you get that from? What is the industry analysis? What's the basis for it? And so having those is going to be a good foundation with your application packet. Other than that, other positive payment history, something that Troy touched on as well. If you have a positive payment history with us, it could be even a personal account, something like that, where we can look at and see, okay, they pay as agreed. That's going to be a big benefit to a new or early stage business. Also, maintaining good personal credit. Again, another thing that Troy had indicated. When we're looking at a small business customer, especially if it's a startup, one of the biggest things we're looking at, in addition to the business plan and projections, is personal credit. How do they manage personal credit? Because that's usually a huge indicator as to how you're going to manage your business financials. And so that's a big deal to us as well. Also, kind of on a side note on that, there are some programs with the SBA that are highly reliant on your personal credit scores. We have to do what's called an SBSS score with the SBA for certain loans of $350,000 or less. And unless you get a score of 165, is what the mark is with the SBA, then you don't qualify for that program. While they haven't released what that formula is specifically for that score, it is highly weighted on personal credit from what we've seen. They implemented that back in 2014, and we can look at credit reports and determine, just looking at them, whether or not it's going to score out with the SBA. And so that's a big one. Also, just building a good relationship with your lender. If you're not ready for the loan yet, if you haven't started your business yet, that's okay. Pick up the phone, start a relationship with them. There's folks that I've talked to a year before they even applied for an SBA loan, just because they had questions about, okay, this is what I want to do. I want to purchase a business. Not sure what business yet, but what would you need? What do I need to look at? What's important? Having those conversations and building that relationship is a great way to start, because once I get your application, maybe a year later, I know who you are. I know what you've been trying to do. I understand you. So those are all big things for me.
That's great advice. Troy, question for you. Are there specific industries or business types that lenders are more cautious about financing? And how should those businesses approach the process?
Startups, of course, obviously. Startups, hospitality, restaurants, recreation or special use properties, storage, car washes, stuff of that nature. Those are ones that are usually shied away from. So a lot of times banks will look to leverage. They see a good creditworthy applicant, but they're not excited about a stall car wash, I don't know, or a storage unit. Which, ironically enough, if you know 504, you have to be owner-occupied. By the way, storage units are eligible for 504, so there's a pitch for that. We see them quite a bit. But yeah, primarily, it's easy to give a loan. If we're seeing something, there's hair on it, right? So, or it doesn't exist. So it's easy to give a loan for a business that has a history of 10, 20, 15 years. We don't get the luxury of working with those types all the time. So you do have to be creative, and find a way to make things fit. From a conventional standpoint to the SBA, and then one other thing I was going to add that I had a note on that I think is important to add as far as adding strategies for getting money in the hands of these small businesses is be willing to even look outside conventional SBA, look to community-based lending programs, look to statewide programs like Network Kansas. We are seeing a lot of that come up lately. There are still limitations, even though that a bank may look to the SBA to mitigate their risk. We're seeing times where an appraisal is short, and then they're only willing to loan up to the appraisal, or an applicant zaps all of their liquidity to meet their injection requirement. Even though they're a good applicant, maybe they're young, again, startup. So what are they going to do for working capital? So we've leveraged some of these other programs, and I think that strengthens the overall global perspective of what these applicants need to be willing to look into to ultimately get and finance their business.
Mm-hmm. I'm glad you brought up Network Kansas. I know that's been a great program for especially us and our clients to use too. And I kind of look at it as kind of a catalog. You're stacking resources to be available, and if none of you are familiar in this room, I'm sure many of you are, it's a great resource I think that needs to be tapped into by all small business owners, whether you need capital right now or not, but understanding those programs and how you could apply is very important. Do you have anything to add to that as far as what would be risky categories from your perspective?
A lot of what Troy mentioned there, but really, it's looking at the market. Where are they located at? One of the first things I look at is market saturation. How you want to open a coffee shop, there's 10 coffee shops within a mile radius here. Things like that. We're going to be looking at. Gas stations, have to be honest, those are a little difficult. There are a lot of environmental issues with that, and so there's a lot of lenders who will kind of back away from lending to gas stations. But just, in general, we're really looking at that plan and looking at who that customer is and whether or not we think that it's a viable deal. So, and just kind of adding to what Troy said and Kirsten about Network Kansas, they do have some great programs. They're one of many resources out there that do offer programs, and we have partnered with Network Kansas on deals with the Grow Kansas fund that they have, and it is a partnership program, so you have to have a bank involved in order to access those funds, but they are a great resource. And there have been situations where we review customers and we really like them. We love the customer, we love the deal, but we just can't get them to the amount that they need. And in those cases, we have partnered with Grow Kansas for those funds. Other than SBA and traditional, conventional financing, there's other resource partners out there as well. Like I think of some off the bat, like AltCap. AltCap is located in Kansas City, but they also have an office in Wichita, and they offer alternative resources of access to capital for customers or for businesses who don't qualify for traditional or SBA financing yet. There's also CDFIs out there that can provide other financing options. There's CDCs out there that also offer like microloans and community community advantage loans. Those are loans that can't be done by a traditional bank like INTRUST. They're SBA-backed loans, but they can't be done by a bank like INTRUST. They actually have to or require a declination letter from a bank or referral from the bank in order for the customer to be able to be eligible for those funds. So there's a lot of different resources out there, and getting connected with a bank who understands those resources and can point you in the right direction is going to be big. So.
I want to open up to all of you to ask questions, because I know when we chat a little bit before we got started here, I know they're scraping the surface of what SBA Lending Program can do. But if there's more specific questions that you have in regards to you, your business, your clients, things like that, I want you to feel free to ask away. Yes, ma'am.
What's the difference? I think the regulations during COVID got a little lax, and then now they changed back to the preliminary, some of the parameters around lending.
Yes.
So what are the changes that are
So
in effect now?
Do you mind if you repeat that question real fast?
Yeah, okay, so the question was, there's been a lot of changes with the SBA programs over the last few years, and kind of speaking to what those changes have been. So right after COVID, I shouldn't say right after COVID, but it was in May of 2023, they kind of changed the SOP completely. It went to kind of a do-what-you-do basis for lenders. And so it was, okay, what do you do conventionally for your similarly sized non-SBA loans? This is what you do for your SBA loans. Well, that really kind of opened the floodgates. it also allowed fintechs to do SBA financing. And with those fintechs and some of the other lenders out there, they used a credit scoring model. And so when they use a credit scoring model, then they could just basically close the loan after they got an appropriate credit score without any underwriting. So no proof of repayment ability, nothing like that. It was just do what you do, go for it, close the loan. Well, that didn't bode well for the program, unfortunately. The losses have more than doubled in the SBA program over the last 2 years since they changed that SOP, and they recognize that that's an issue. And so on June 1st, a new SOP was put into effect, the 5010-8, that basically brought back all of the underwriting guardrails that were in place prior to COVID. And so now it is not a do what you do. It is we must prove that the business can service the proposed debt. There's certain ratios that we have to meet, a lot more documentation that is required. Now, that being said, at INTRUST, we didn't deviate too far from what the original SOP was all along, just because we do full underwriting for everything. We want to know that our customers can repay the debt. And so we never, strayed far from that. But there will be a lot of changes for some lenders who did go by the do what you do. And so, we've had situations with customers where they got a loan during that period where it was do what you do, and they got it with another bank, and they come to us and, they're wanting a new SBA loan. Well, rules have changed, unfortunately. But it is for the good. It really is. It'll help, the way that it was structured prior, it really compromised the integrity of the program. The SBA program is supposed to be zero subsidy, meaning it is funded fully by the guarantee fees that are paid in by the customers when they get that loan. And it was getting to the point where it was not going to be zero subsidy, and then we don't know what's going to happen with the program. It's been around since 1953. We don't want to see it go away. And so, being honest, I'm kind of happy to see those guardrails go back into place with this new SOP, truly. And I think Troy echoes that. Absolutely. So.
Do you have anything to add on that?
No, I mean, do as you do was conventional lending, and you do an SBA loan because it's not conventional lending. So to go away from that was we didn't understand it. We did the same thing. It was, Kirsten, literally, we were talking out there that we didn't follow do as you do. We maintained our standards, and I'm glad to see it come back. So you do need guardrails within this program. So, everybody does an SBA loan once a year, maybe, or once every other year. It's hard to keep up on those rules, and if you don't know it and you do as you do, you're missing a lot of eligibility. That's going to jeopardize your guarantee. So we do package 7A loans, and that's ultimately our goal. So is to protect the bank's interest in that guarantee. And if you deviate outside those rules, you're giving them a reason to cancel your guarantee if it ultimately goes bad. So I'm glad they're back as well.
Any other questions from our audience? Yes, sir.
You mentioned appraisals. Is there a process you have to use? Like a typical bank, you have to go to the bank and they order the appraisal. Do you have a similar process with the SBA when you get an appraisal done through your lending process?
I'm going to repeat the question real fast. Asking about appraisals, is there a similar process of traditional lending versus an SBA process?
Yeah, no real difference. If it's a 504, we have to be added as an intended user, but it's a full summary appraisal with at least 2 approaches. So as long as it's dated within a year of date of application, it's going to be accepted by the SBA. So.
Do you pick the appraisal?
No, we defer to the bank. We try to not rattle the bank's policies and practices as much as possible. So whatever the standard practice is for that particular bank, we just make sure, and inevitably sometimes we have to go back and get us added, but that's really the only one requirement, is that we're added along, meaning us, the CDC, is added as intended user to rely on that report.
So let me ask a follow-up question. Thank you, Bill, for that question. So let's say you mentioned you can use an appraisal within a year of it happening. So I'm going to throw out a hypothetical scenario. Let's say I come to you, Chrissy, and I need a loan to buy a building. And then 6 months later, I need additional capital to buy inventory or to buy equipment, and I want to use SBA funding to do that. Can I use the appraisal that we first got from you within that time frame? How does that work?
So yes, if it was ordered by us, for us, intended use for the loan, then absolutely we can still use that. We've had situations though where folks will come to us and they get their appraisal on their own because they want to make sure that they're offering an appropriate price for the property. Unfortunately, we cannot use that appraisal. What we will do in those situations though is we can reach out to that appraiser to see if they can readdress that appraisal to the bank with us as the intended user, and if it's 504, also adding the SBA and the CDC that's involved in that. But the appraisal does have to be ordered by the bank and for the bank.
Gotcha. Great answer. Additional questions from the audience? I got one. What's the most bizarre thing you've ever funded?
Oh, gosh. Hold on, I might have to think about that. Troy, do you have one?
I'm looking at Liz.
I'm always
know.
curious. I think myself and my colleagues, we see in our
is.
industry, we see trends that happens. Like a number of years ago, it was all about the vape stores. Now it's all about the coffee shops, and everyone wants to open a restaurant.
Yes.
But I'm sure you probably have some fun stories to share.
I'm looking at my folks in the room from INTRUST and see if anybody remembers anything that was kind of out of the ordinary. Everything's been pretty vanilla.
Or how about any requests for things that you couldn't fund?
So, yes. Okay, so with the legalization of marijuana in most states, especially all of our surrounding states, there's been, requests for, CBD stores and marijuana facilities and things like that. And obviously we can't do that because, especially SBA, and no bank's going to touch that either, who's federally regulated, because it's not federally legal. And so we get those requests, and unfortunately we have to turn them away and explain to them that it's not legal on a federal level, so we still can't do anything. We can't bank you, unfortunately. And so those are the ones that we see kind of more often than not with the legalization coming through. But one of the things that we really have to watch for that kind of surprises folks is if we're working with a customer who, let's say it's a CPA or it's an attorney, and they advertise on their website that they cater to marijuana related businesses. If it says that, we cannot provide SBA financing because they are advertising that, and some of their income is derived from those funds from businesses who are not legal. And so we have to be really mindful of that. And we had a situation, unfortunately, it was a CPA who had requested SBA financing, loved the deal, everything looked great, went to her website, and the first thing was a marijuana leaf. And I was like, oh, dear goodness, we can't do anything because of that. And she wanted to remove it, but it was kind of you can't unknow what you know type of situation, and so we couldn't move forward with that deal. So those are kind of the more interesting ones that I'm seeing right now. So.
That's a good one. I like that. Yeah. What do you got, Troy?
Real quick to just piggyback on Chrissy's point of going to the website and seeing a marijuana leaf. SBA does look into that. You submit an application, they'll go to the small business website. We were approached to do a 7A for a daycare that was religious based, and went to their website, and there's obviously notations towards religion practice, so had to turn them away. So just want to mention that because that's a great point, that they will investigate even further than what you provide. Actually, I saw Ben, and it brought back maybe one of my more unique 7As that we did. We've done an app, if you can believe that. So
Really?
So we were able to do an app with the 7A. 504. We've done, and I saw Lisa walk in, who's a customer there, a marina. In fact, we've done 3 504s for the same marina as they've expanded, and this is on Corps of Engineer land. So just you can see how creative we can get. As long as you can get a lease and work out those arrangements, we can get creative and do really unique projects. So I think I even mentioned a crane before. So we've done some weird stuff.
That's great. Any more questions? Yes. Oh.
Favorite stories or like success stories or?
Any favorite stories or success stories? I mean, how do you top marijuana? I mean, come on. That was not a success story, though. So.
They might be successful. Successful getting a loan.
Oh, yeah. Yeah, honestly, I mean, he's so, I shouldn't admit this. Liz and I, and forgive me, I should introduce Liz because she's the true brains behind Wakarusa Valley. So Liz and I were the only 2 staff members up here. So Liz Cuevas, almost said your maiden name for some reason. Anyway, so she's helping me remember some of these projects. But what I shouldn't admit is we have kind of a Mount Rushmore of borrowers. You have your favorite borrowers. But we recently did Kus. I can't pronounce his real name. He's Nepalese, from Nepal. Is that how you say it? But purchased the gas station recently there in Lawrence on a very busy street. Has really turned it. It wasn't a very favorable location, but he's one of those guys that everybody knows. He actually got our name from a restaurateur downtown on Mass that's had 3 restaurants down there. Then we did a second 504 for him to open up a liquor store that was in an abandoned building behind it. So, you know, you have these favorites of these you know, maybe they're not U.S. citizens or startups or whatever, but they become quickly your favorites because you see the success that they've had, and then they're back for more. And probably the repeat borrowers are my favorite because there's times where you're like, I don't really like this deal, you know, but you do it because you want to help, and there's enough reason to not say no, and then they come back for their second and third. So those are my favorites.
That's awesome. Yeah.
Yeah, I mean, I've got a few favorites over my time too. There's one customer that he started off with a computer store, and it was a small deal, and he turned it into a very big company in Wichita. And then also he expanded and went into the restaurant business, and now he has multiple restaurants all over, not just in the Wichita area, and is looking to franchise. And so having these customers that we see from the very beginning when they just have an idea and seeing them grow like this, and in some cases opening multiple businesses, it's extremely satisfying to be a part of that. We've had other customers, and actually he was one of them who won a Kansas Small Business Person of the Year. We had nominated him for that. And then we had another one that we had also nominated for Kansas Small Business Person of the Year, and they won that as well. And it was a restaurant. It was a startup. He went through some challenging times and was able to get everything back in order with his business and is extremely successful. And so it's really rewarding, I think, to be on that side of it and to see, you know, these businesses and the struggles that they have, and to see them come through those struggles and be insanely successful. So
That's wonderful. Bill, you had a question.
For Troy, I know a lot of people contact you directly before starting the process, and I've done that too. How do you then typically get to your bank relationships? Is it typically just their existing bank relationship that you go to, or do you typically see the banks that are specializing in SBA loans that end up?
Yeah, I always make the joke, we're Switzerland, we're neutral. What I'm going to do for INTRUST is the same for CapFed or CoreFirst or whoever. My script when I start with that, Bill, is what's your bank of account? I touched on it earlier. You know, if there's any kind of history that I can lean on when trying to get, you know, a project going, I want to start there. So who do you bank with? You know, I've been doing this long enough to know, you know, the active banks in SBA, and I think they have an advantage. I fully understand that the whole goal for any bank is to do every deal conventionally if they can, but that's just not the case. It's not going to fit their policies. So, you know, it's a way, that's the biggest challenge that Liz and I have, is to educate those banks that either barely participate or don't participate, but just let them know it's an option. So there's no expectation that any bank has to know these rules. They change daily. Kirsten and I were talking about it. This is why we exist as a CDC, because we fill this niche. And so we do have a network of banks that we know are very active in banks. We know the appetite because we've been working with these banks long enough to know, you know, maybe they're overrenting hotels right now. So I'm not going to recommend that one. So if they don't have a bank of account, or if they do, let me back up. If they have a bank of account, okay, where are you located? Are you Topeka, Lawrence? You know, go talk to Beth in Lawrence. If, you know, talk to Ben if you're here in Topeka. It's good to make that connection. We had a lady come into our office yesterday, and she mentioned Central Bank, and I just mentioned the lender there. She's like, looks at this, incredulous. She's like, how do you know this? And I'm like, make that personal connection. If you could give them that name, that number, talk to them directly where they live. That's where I start. So there's factors that I'm asking, and based on, you know, what they need, what they're financing, where they're located, I'm going to give them 3 banks every time. So, I say, I have more, start there, go talk to them. Some won't have any interest in doing an SBA loan or conventional, so learn that, go on your way, and we'll find another one down the road. So
That's great. Any additional questions? Any parting thoughts from? Got one. Sorry about that.
So one of the things that recently changed, I think, is that SBA loans can no longer be used to help refinance predatory loans that some of our businesses have been experiencing when they're in a cash crunch, basically. So they get a percentage out of their sales taken daily or weekly, so their cash becomes even shorter. What kind of solutions are you guys working with to try to help navigate that space now?
That's a good question. The question was about predatory loans. How can you utilize SBA lending to help with that cash crunch?
Yeah, I'm assuming you're talking about factoring, and that's one of the things, yes, unfortunately, we can't do that anymore. But we can still help with predatory loans that aren't factoring loans. And so, you know, we've had some out there, and I'm trying to think of the name, on deck, thank you. We've refinanced some on deck loans, 20-some% interest, all that awful stuff. And so we can still do that. It's just the factoring piece. If it's a factoring situation, unfortunately, that was taken out.
The only other thing I might add to that is I'll start asking questions about your other credit facilities. What else do you have? You know, there's 1,000 ways to cut the pie. You know, there's many ways to navigate. Yes, we can't help with that, but what other you know, what's your debt schedule look like? What are the things that we can maybe help restructure to free up some cash flow to handle that situation a little bit better? So again, it's just a conversation to figure out what other ways we might be able to assist, even though we can't directly with that particular product.
Good question. Any other questions from the audience? Any other final thoughts from Troy and Chrissy?
I don't have anything more to say. I appreciate the invite here. This is a good opportunity. A lot of good people, you know, friendly faces that I see. Chrissy and I were hoping you guys would hit us a little bit more hard-hitting questions. But if you guys have questions, you know, find us, you know, give us a call. We're happy to talk anything through. So that's my favorite part of the job is, you know, like you were saying, I like to find the puzzle and figure out ways to be creative with what we can help with.
Same. Don't really have a lot else to add, but if you guys have any specific questions for me, come see me. I'll be out here. I'll have my business cards if you guys want to contact me directly. I'd be happy to help with anything. My favorite part of it is just working with people and getting to talk with you and get to know you and understand your businesses and seeing, you know, what way I can help. So just get in contact with me if you have any specific questions. I'd be happy to help. So.
Thank you. And thank you very much to Troy, to Chrissy. Thanks for Liz for coming too. They're going to be here afterwards. We have some great refreshments catered by INTRUST Bank, so thank you very much. Please join us out in this gorgeous lobby. There's even some outside space if you're you know, brave and want to go face the heat, or not, stay inside like me. It's okay. But thank you very much. I want to thank our speakers for joining us today, so thank you.
Thank you.
Tonight, I would love to okay. It's all right.